Good morning, traders. Paul here with Gamma Edge. Today is Friday, the 17th of June. Let's get started. Please pause your readers. Read this. It's important to you. It's important to us. Market model still very negative. We're in a downtrend, a strong downtrend, according to what we call the ribbon or the historical moving averages. This is on the cumulative tick, which you see here in white. When we are well below this, we have proven through significant back testing and just real-time utilization that we use in the Discord that the primary trend is down, and you should be playing that accordingly. Also, yesterday we had a failure of the short-term moving averages, these ones in white, and the cumulative tick, and this should have positioned you to play the downside into the day. You can see SPX actually moved up, but it was not confirmed, and of course that paid handsomely for those who participated. Index conditions overall, when we take a look at the gamma, we're seeing net negative gamma increase, net positive gamma, which are short-term positioning, across the board. Now, there are some other currents that are going on. For instance, in the SPX, or excuse me, the SPY, we had zero go up slightly from 412.50 up to 420. This means that short term, there were some calls that were added or puts that were closed, excuse me, despite what you're seeing here. The key takeaway here is that you've got a number of things that are occurring, very volatile times, especially with the expiries that are going on, and expect to see some conflicting signals as we go forward. Same thing on the Qs and then IWM. When we take a look at volatility, volatility did not confirm anything on the bullish side. We actually saw a reduction in puts and an increase in the short-term gamma on the call side. We do not think that the VIX behaves in a gamma environment like all the other equities or indices, but it's important from a visualization perspective to be able to relate what we're seeing to the other charts, hence why we do this. Near-term expiries, the key levels are called out here. You can see the black dot, which is the close as of yesterday. And so the 3,700 level in the SPX is going to be really key. 370 in the SPY. Above that, we don't have a lot of pressure. Below that, the moneyness grows, and you can see there could be, because this is equity settled, there could be some pressure to go to the upside. If we go above 370 and remain there, and I think we will open above that, potentially there's going to be very little pressure to move up, and there's going to be very little pressure to move down. It'll be very interesting to see how this plays out. So the key levels there, 370, and the Qs 275 and IWM 165. Study these charts, they're important. Want to highlight a new capability for the folks in the Discord. These links here are live here at the bottom. You can key them in and go look at them. Basically, you have the ability now to look at OI change either on an overnight, which is the default, or you can look back in time. You get two presentations. You get the expiries, so we can see what was closed and then how it was rolled out. And in this particular case, the 15th was closed on this particular SPX expiry, and it was distributed out here. And you can click on the links and have interactive charts to look at that. And so when we do that, you can actually look at the SPX, the SPY, the Qs, and the IWM on the next pages, and I've got some call outs here. It basically shows that we're seeing the SPX roll out to July and September on both the call side as well as the put side, and you can look at where are those new calls and new puts being distributed. And when we see puts this far down, it's not that they're intending that will go down there. These are most likely short hedges from the dealers. But it does indicate that new OI was open, so it's something to keep track of, and you can use other tools to go look at the directionality of that. When we take a look at the SPX structure, I think it's important to realize we're seeing in the true gamma zero and the true delta zeros, we're actually seeing those drop. When we see those drop, that means puts are being added, calls are being closed, and so in a longer term sense, the structure of the SPX is still dropping. There's still a very, very significant bearish undertone that is occurring with the puts that are being added. They're outpacing the calls that are being added, hence why these numbers drop. That being said, overnight we did have a significant drop in positive gamma. This is a short-term phenomenon. When we see this drop closer to spot price, folks are wanting to take advantage of any move up in spot price. This does suggest that smart money is going to play a bounce if it occurs, and we see that through that positive gamma expiry. Also want to note this yellow line is something we call plus trans. It's our own construct. Basically at this strike 37.05 and above in a short-term sense, 180 days and less, we are actually seeing positive, net positive gamma in the structure. When we see that, that means calls were added and puts were closed. And that's actually very constructive for a short-term bounce. Finally, want to just call out POI, the put open interest, which is not a delta or a gamma construct. It just answers the question, where is the dominant put strike in the complex? It's down here at 3,500. It's dropped a lot. That means we've had puts closed and basically exposing this level. Either puts were closed or puts were open down here, making this the dominant level within the structure. So something to pay attention to. When we take a look at the 0 DTE, the circle 1 indicates it is the single expiry, fairly significant amount. You can see a very clean transition here at 3,700. Also, I've got a very significant delta notional. That's big. That's a big number. We also have a large number of calls coming off and a large number of puts. This is the PM expiry, so this is what's happening today. Below this, negative gamma. You can see across the board net negative deltas all across the board. So longer term, still very put laden. Short term, starting to see some positive gamma come into the equation. 3,700, definitely a line in the sand. We want to pay attention to that today. The combo expiry, which is the AM at the open, as well as the PM, is very significant. Again, look at the coincidence of that 3,700. We want you to pay attention to that 45 billion sitting there in delta notional. Up here at 38, 27 billion sitting there. It's going to be very hard to plow north here. Got 18 sitting there, etc. To the downside, 3,600, line in the sand. You can see not as big delta notionals in the expiries, but the gamma levels are significant. Want to call out this little value here at 3,660. Sticks out like a sore thumb. This is very interesting. When you see something like this, this could be a pausing position into the close. We want to pay attention to this. If you can get a very cheap butterfly or something along that, you might just want to do something like that using paper trading, of course. Taking a look at the overall combo, net negative, very significant number. Down here, we still have 22% coming off today. About 17% of that is at the open, 5% of it is at the close. 3,600 down here is a very, very large line in the sand. You can see the 3,620, 3,625 area is another area that could be sticky as we go down. 3,650, we closed here yesterday. You can see there's not a lot above us, right? So liquidity is on the quarter levels going up. Delta notionals are extremely large. I doubt very seriously we're going to get above anywhere near 3,800 into the close today. You can see the gammas start getting a little weaker as we go up, but in general, it's going to be very, very hard to move up. I would be surprised if we closed above 3,750. Today. We'll just have to wait and see. I think the likelihood of going down is much greater than the likelihood of going up. But that being said, with all the delta coming off of here today and what we're seeing in general, the dealer response will be to buy to offset that. The only way that could change is if we see a lot of puts being added today to offset some of that. We're just going to have to wait for the 0 DTE to unfold today. The SPX structure, we're watching below the 3,600 for growth. We are right here. We're at 3,665. We don't have a lot of negative gamma below us. And the folks who are skeptical amongst us will say, well, wait a second, it's gamma, it's short term. If that were the case, take a look all the way up here at 5,000. We've got call gamma that we can see as far as the eye can go on the plus side. We're not seeing that on the short side. Liquidity below 3,600 is extremely poor. If we lose 3,600, we could rapidly move down because the quarter levels are predominantly where it is, and it doesn't exist for very long. Be aware of that. Liquidity below 3,600, extremely poor. No liquidity, big price movements. big downward price movements. So that is one of the trajectories we're looking at. We would like to see a push upward. You can see 4,000 has moved solidly negative, 4,100 is solidly positive. We do not think we're going anywhere near this. We've got a lot to get through to get up there, but just be aware we're deep in the hole and there isn't a lot above this 3,700 level, as you can see visually, as you can see. So where are we for today? The market model's bearish. Sell the bounces, paper money, of course. The zeros continue to drop in the SPX, which is a longer term indicative, especially with the deltas dropping, that puts are being added. 5.5 million contracts that are expiring today, 4.8 of those are at the open. The market model inverted, long-term downward, so that's bearish. Shorter term, well below the moving averages. A bounce is possible, but we are not optimistic that it's going to last. The wing charts are showing short-term gammas being opened on the put side. People are placing downside protection. We can move down, but it'll be controlled unless we lose 3,600. That's a key level. Multi-day upside, I don't think we're getting anywhere near 39.90. You can sell to your heart's content above that level. You might even be able to sell above 3,900. Downside is volatile. 3,600 should hold into the weekend. Not anticipating that it won't, especially with the JPM sitting out there at 36.20, but just be aware. So that's it for today. If you like today's content, please come and join us here at gammaedge.us. That'll take you to a sign-up page. That'll get you into the Discord, 14-day free trial, all the tools, charting tools turned on, the new OI charts, etc., all available. Independent of your level of membership. Follow us on Twitter at GammaEdges with an S. And if you like today's content, please smash that like button and follow us so you get notified next time we post something. Thanks, everyone. Hope to see you in the Discord. Make it a great 3-day weekend, and we'll see you here next week.